Yeah, I did. Welcome, everybody. Good morning. We ready to talk numbers this early? I know we had like 60 people signed up. We're at 27, so apparently some people are dragging a little bit behind this morning. But I want to honor those people who are here. So let's get started, and we'll do introductions first. Before we get started, a couple of housekeeping things. Did everyone get an email with the manual? Because this is a workshop. You will be doing hands-on practical things today. So you will need two things. You will need the manual and you will need last month's bank statement for your business. So please put your email in the chat if you did not get the manual from Gordon yesterday. And we will be taking a 10-minute break right before we start working on your profit and loss statement. So if you didn't get that pulled together, don't worry about that. We'll give you a 10-minute break to pull that together. But put your email in chat if you need the manual. And Gordon, can you make sure that you email that out to those people? Thank you, Gordon. And then I'll introduce myself to those of you who don't know me, and then we'll have Amy introduce herself. She's a rock star, and we're going to tag team this today. And then and we'll kind of go back and forth between the two of us. So my name is Nova Lee Bettis. I'm the MCA in Orem. I've been here 13 years. So I'm the old one of the group. In high school, I took an accounting class and I was hooked. That was all it took for me to fall in love with accounting and with numbers. And I've been doing it ever since. Numbers make sense to me. It's a formula. It's always the same. Like at the end of the day, when it balances, that is like a high for me. I get great satisfaction from that. I love meeting with agents and helping them understand their numbers and the story that those numbers are telling them. And I'm passionate about that. So that's why I'm still here after all these years. And I love what I do. I also get to work with all of the MCAs across the state. And that's, I love the ability to do that. You guys are in tremendous hands with the MCAs in your market center. And you are so lucky with those people. They are tremendous people. What else, Amy? Amy, if you want to introduce yourself.
Sure. So I'm Amy McMullen. I am the MCA over at the South Valley office. I have been licensed as an agent for almost 11 years. I've been in real estate for about 13 years, and I've been the MCA over here for about 4.5 years. I got my broker's license a couple years ago just to be able to help the agents that I work with better. And I started off in the finance industry before I got into real estate. I would help companies recover lost funds and recover money. So I spent a lot of time looking through profit and loss statements and finding where money was leaking and helping them recover that. So this is kind of like the perfect spot for me. I get to do my real estate and I get to play with my numbers. So yeah, that's a little bit about me.
Awesome. So this is a CE class and it is a workshop. So there are a few rules, unfortunately, that we have to go through. One of them is you have to attend 90% of the class, at least. You have to be on camera the whole time, and you have to have a working microphone. So there will be question and answer. You have to be, it's interactive in order to get the CE credit. So everybody understand those rules? Okay, awesome.
I just sent the manual out to everybody that needed it, unless there's anybody else.
Anyone else need the manual? Perfect. Okay, Amy, do you want to get started?
Sure. So one thing I would say is if you're looking at the manual digitally, have a notepad or some scratch paper or something, because some of this stuff are going to work through together with your numbers. So it would be helpful if you had something you could write with there. All right, so profitability. I mean, why are we all in real estate? What is our end goal? And by the way, you have to be interactive with me because I like to teach in front of people and Zoom is hard. So feel free to just speak up and talk. Why do you do what you do?
Make a living.
Absolutely. It all comes down to we need to make money, right? To fund our lives, to provide for our families. So Gary Keller, when he was asked what is wealth, he said that wealth is the amount of passive income needed to fund your big why. So that can be a lot of different things, and it can be a lot of different numbers. And depending on what your big why is, it could be a lot, it could be a little, but that's kind of what our goal is. We want to have enough passive income coming into our lives that we can fund our big why. So financials can be a little bit dry, shocker. So I want to start you guys off with just a little bit of humor. Let me see. I hate flipping back and forth with Zoom. Share screen. Okay, can you guys all see my awesome video? Okay.
What's this? Looks expensive.
This is some new bedding.
Can't see your video.
Oh, you can't see my video?
No.
Okay, it is on. What does that green bar mean? Okay, let's go.
Here you go. Now we see it.
Now you
Got it.
see it? Okay, I'm gonna turn my volume up because it sounded really quiet too. Let's see. Let me go back to the beginning. Hopefully we've got some Schitt's Creek's fans on here.
Sure.
What's this? Looks expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the stores, so work is paying for it.
Work is paying for your bedding?
I was gonna, but now I don't want to.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the stores, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This? Not a write-off.
Oh, well, the bedding's non-refundable, so.
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
Sure.
Awesome. Okay, let me switch back over to our presentation.
Amy, I'm literally wearing a shirt for Schitt's Creek.
Really? I was wearing one just the other day. It's like my favorite show ever. Whenever someone says write off, I'm instantly like, oh my gosh, have you seen? So knowing the basics behind business economics is so important because all of us are business owners. So we need to know what a write-off is. We need to know who's paying that. We need to know what the purpose of it is. And that's how we're going to find profit. So let's talk a little bit about the perspective. What do you guys want to get out of this class? What are some of the goals that you have at the end of this few hours we spend together?
to know which
Awesome.
things we need to track and which things are write-offs.
Perfect. What else?
I've been committing to get my P&L done for, I think, 3 years now.
I love it. We will help you with that.
Thank you.
Awesome. Anything else?
I feel like I'm doing pretty well, but I would like to make sure there's nothing that I'm missing.
Yeah. Awesome.
I'm
So,
a new agent, so I just want to make sure I'm set up to like succeed financially in the business. So start right off like correct from the beginning.
I'd agree with Jordan on that one.
for sure. Okay, great. So I also want to make it just so talking business finances isn't scary and overwhelming. A lot of times when you say we're going to talk about a P&L, people will check out, or we're going to talk about taxes. That is no fun. And that's true. It can be no fun, but it can also be fun. You're building your business, you're growing your big why and funding your big life. So I teach a lot through personal experience. So you're just going to know me really well by the end of this class. So hopefully that's all right. But when I was growing up, I grew up in a family with 7 kids in a 1,300 square foot house. And we lived in definitely the scarcity mindset. And money was not something that you talked about. It was whispered about and stressed about. And I never knew if we had money or not until one of my siblings would come and say, hey, we need to scrape money together. The phone got shut off. And I was like, oh my gosh. So I grew up thinking money was attached to scarcity, lack of things, and shame. And it took a really long time for me to change that outlook. Money is good for the good it can do. And just understanding how it works and being in charge of your money and not being, you know, a victim or at the mercy of whatever money you have left is so powerful. So my goal today is to help you guys build a financially sound business. Does that sound good? And we can talk about money and it's fine. I'm going to be so open. You're going to know all my finances. Okay. Let me come back in here. Is my business financially sound? I thought I had some money and it's gone. That seems to be the story of my life quite often, right? Okay, a financially sound business. You need to have a profit goal set that funds your big life and pursue the activities to achieve it. You need to estimate, save for, and pay your taxes on time. You need to use proven models and systems of both the MREA chart of accounts and the career growth initiative, and we'll go over those together. Be fiscally savvy by reviewing your financials monthly. Pay yourself a salary and prepare now for a financially secure future. So at Keller Williams, we teach all of our agents to run their finances just like we run the market center. It's the same principles, the same chart of accounts. We do things the same way. So every single month after Novalee and I close out the books, we sit down with the owners and we go through a finance meeting. And you should be doing that in your business as well, so that you are accountable to your numbers every single month. And that will also drive you to get that P&L completed, to be looking at your budget, have an accountability partner and set up and say, hey, let's have a finance meeting together and we'll present we'll present our finances to each other. It's so important. And that way you always do it. If you have someone asking you, are you ready for our meeting? You're going to do it, right? Okay. Money talks, but all mine ever says is goodbye. So we're going to fix that. So an unsound business, unsound financial health will inhibit your opportunity and growth, reduce your effectiveness, will sap your time, create unneeded stress, and can be expensive. A sound business is worry and stress-free, allows you to take advantage of opportunity, frees you up to do more, makes your money work for you, and prepares you for challenging times. So here's a couple visuals. Well, here's what it feels like when you stay within your budget. Here's a couple examples of what financially unsound looks like. So Mary sold a house. The check from the title company was $9,000. After paying her cap and royalty fee, she got a check from the Market Center for $5,760. So what did she do with that money? She put it in her personal bank account. None of it went to business or taxes, and all $5,760 went to Mary's wallet. Do you find that you do that sometimes? It's really easy to do. What should this look like if it was financially sound? Okay, she got that $9,000 check from the title company. After paying cap and royalty, Keller Williams wrote her a check for $5,760. 100% of that $5,760 gets deposited into her business account. So then from her business account, 30% of that goes to paying her expenses, and 70% goes into her personal bank account, of which she has tax savings for state, federal, self-employment tax, and $2,419 of that goes into Mary's wallet. Okay, so basically one transaction, $9,000 commission, $5,760 is your net payment check. $2,419 goes in your pocket. You've now saved money for your business. You're funding your business, and you're treating your business like a business, and your taxes are already saved for and accommodated. Does that make sense? Does anybody have any questions on that? Okay, awesome. So when I started as an agent, I 100% did the opposite. And every check I got, I threw it in my family account and was like, yay guys, look at what mom brought in. And it was really quick to find out, oh shoot, taxes are expensive. And after I was licensed for about a year, my husband got laid off of his job for 18 years and was having a really hard time finding a new one. He was really specific in the tech world, and was taking on like contract positions while he was interviewing all over the country for these different positions. And he was like, you might need to go back and get like a salary or an hourly job or something, because we can't both be like commission only. This is super scary. And that made me really look at my finances and be like, okay, if this is my business, this is my career, am I treating it as such? And that's when I went and got a CPA. I made my S Corp. I started paying myself a salary, started paying quarterly taxes, and was able to make my job, my business, a business, and pay myself a salary. So it's doable. And none of us, I don't think any of you that would show up for this call are looking at real estate as a hobby. It's our business. So we're going to talk about how to treat it as a business. Okay, so your numbers tell a story. What do your numbers tell about you? So your numbers, your success. There's lots of different numbers that are tracked in real estate. And most of the time you'll hear people talk about the top 3 on this list. Gross commission income. I sold $50 million worth of real estate last year, right? Or that's volume. Gross commission, I made $100,000 in commission last year, or whatever that is, $400,000 in commission last year, or I closed on, 52 homes. Most realtors use those top 3 objects to define whether their business is a success or not. That's the story they tell. But what they're not telling is, what was your net income? So if you made $100,000, that's wonderful, great. How much were your expenses? How much did you take home? How much did you have to fund your family? You might have only brought home $15,000. That's much less like bragging than, oh, I brought home 70,000. And we're going to talk about how to get that number up. But that is the number when people say, oh my gosh, I sold 146 units last year. I'm like, awesome. What was your net income? What was your bottom line? That's the number I want to know. That's what tells me if you're a savvy business person or not. A lot of times we know the money in the bank, and we can track these through some tools that Keller Williams has. The multi-year trends report, we'll go over that. And the language of real estate lore, we'll go over that as well. So know your number. You probably know your weight. You know how many miles are on your car. You probably know how much you pay in rent and mortgage. But can you tell me off the top of your head, what are the numbers that define your business? And a lot of people can't. Okay. So imagine the possibilities. What do you want to do with that net profit? You can fund your big life, grow your business, invest in your future, build a legacy. Whoop. All kinds of wonderful good things, right? Good things come from having money. They do. There is an activity in your book called the Financial Fitness Assessment. And I'm going to read the questions off, but if you have it in front of you, mark yes, no, or sometimes. If you only have it digitally, write down the ones that you put no or sometimes by, because those are going to be the ones that you might want to focus on. Okay. So do you have a profit goal, a stated profit goal for the year?
Amy, I
Yes.
think it's on page 9 in their manual if they're looking.
Yes, page 9 in your manual. So do you have a stated profit goal for the year? Yes, no, sometimes. Do you use a written budget for your business? Do you use a profit and loss income statement and review it monthly? Do you have separate business accounts and personal accounts and credit cards? Do you contribute to a tax savings account regularly? Do you pay your estimated taxes each quarter? Do you have a tax advisor or a CPA? Do you track your business miles driven? Do you keep your receipts for your business expenses? Do you pay yourself a regular salary? Do you use the MREA chart of accounts? Do you know how your margins compare with the MREA margins? Do you know the average cost of each of your transactions? Do you know what it costs your business even if you make no money? Do you have an active profit share tree? Do you have a solid plan in place for your financial future? And do you have no outstanding consumer debt? So as you fill out that little assessment, how does it make you feel? Did you come up with any ahas of maybe some things that you're missing?
Way too many no's.
Got a few things to work on.
Yeah, for sure. Well, we'll go over all of these topics in here so that you have an action plan and feel comfortable with those. So we did the assessment. Okay. So every adversity, every failure, every heartache carries with it the seed of an equal or greater benefit. Okay, we're going to talk a little bit about those MREA budget models. If you don't have the MREA book, you should grab it. It's basically a roadmap to being a millionaire real estate agent. So here's the economic model in a nutshell. So your income is all the money that's coming into your business, 100% of your income. Your expenses are broken into two categories. You've got the cost of sales and you've got operating expenses. The cost of sales happen only when you make money. So only when you have a closing do these expenses incur. So those would be things like your market center split, your royalty split. You don't have to pay that unless you have a closing. A lot of different other things. If you are paying like a transaction coordinator or something like that, that's based on the transaction closing, anything that is paid with a closing is cost of sales. Operating expenses are going to happen whether you have a closing or not. So if you have signed up for some lead generation that's charged monthly on your credit card or something like that, that is an operating expense. They're not going to not charge you just because you didn't have a closing. So that's going to be an operating expense, what it costs to keep your business moving, whether you have a closing or not. Does that make sense? And then profit is going to be your net income, what is left after you have your gross commission income, less your cost of sales and operating expenses is going to give us the net income profit number. So the way that this would break down with a commission check, we'll use 10,000 just to be really easy math. So if you have a $10,000 commission check, 3,000 of that is going to go to cost of sales, 3,000 to operating expenses, and you should have $4,000 in profit. So that's a 40% profit margin, which is really good in any business that you look at. That's a really good sound model. Does that make sense to everybody? Yeah.
I'm a little confused how that breakdown works in conjunction with the breakdown that we went over just a few minutes ago about going from your business account to your personal account.
So
Did we
in
put
the
that all together?
Yeah, so the business, let me go back to the where it broke it down here. Let's see, let me see if I can do this faster. Your cost of sales, that 30% comes out. Okay, I'm just going to show you every slide over again. Where is that slide? Here we go. Okay, so in this one, so where it has the 1728, that's the 30% that's going to go to pay your expenses, your operating expenses. So you've got the 30, 30, 40, so that you've got 70% going to your personal account, but you're saving 40 for tax purposes and 60% to pay out yourself.
So just to make sure I understand, you pull the 30 first before you pull the taxes. So then the 40 comes out of the 4,000, right? After you've paid your business expenses.
Yes.
Okay.
Okay, let me find. Okay. So this goes a little bit over the flow of money, how it typically works. Then we're going to talk about how we can plan and get that profit number that we want. So typically in the flow of money, you've got income is what comes in, expenses is what goes out, and your profit is what's left. Pretty simple. This will tell us, okay, we're going to start with profit. How much profit do we want? That's that net number. How much do we want to have at the end of the day? So then we're going to back into, okay, how many homes do I have to sell in order to be able to hit that profit number? And how can I minimize my expenses to maximize my net income? As most of you know, like we're kind of in the start of just a little bit of a shift in the market. And this is so important to be able to do and know, because you can't revenue yourself out of a shift. You can't just say, okay, well, I'm just going to sell twice as many homes. It's fine. It'll be fine. You have to do things together. So Gary Keller says, when you're at the start of a shift, double your lead generation efforts. If you're doing an hour a day, do 2. If you're doing 2, do 4. But then also cut your expenses. You have to make it so that your expenses are minimized until the incoming is greater than the outgoing again, right? So learning how to look at your expenses and in relation to your profit goal and the income that you have coming in, you can help change these goals throughout the year so that you know where you're at and you can scale where you need to put the attention in your business. Okay, so what goes in? Income from your real estate business. Typically, commission is 3% on each side. That'll include your listing income, your sales income, referral income, and leasing income for both residential and commercial transactions. We talked a little bit about what goes out. You've got the cost of sales, which is what you only pay when you have a closing, and you've got operating expenses, which are those monthly expenses that happen whether you have a closing or not. Okay, so the cost of sales is the cost of making the sale. So that's going to be commissions paid to your office, royalty fees, splits paid to employees or independent contractors that are involved in the sales, or any referral fees. Okay, so this goes a little bit into the weeds, so stay with me. This is the way the cost of sales affects your net profit. So one of the cool things with Keller Williams is you get to cap, right? So we all have our market center cap, where after that cap, we get 100% of our money. And that goes for the company dollar cap and the royalty cap. So the cost of sales, if you have not capped on company dollar or royalty and you get a $9,000 check, 30% is this. These are just basic splits. They might not be your exact splits, but these are just basic standard Keller Williams splits. 30% will go to your market center cap. 6% goes to your royalty cap. So 2,700 and 540, which makes your net $5,760 after you pay market center and royalty. If you've capped on royalty, but have not capped on company dollar, because these cap at separate times, then you're going to have the 30% taken out for your company dollar, no royalties because you've capped. So now your net goes up to $6,300. If you've capped on both royalty and company dollar, which I believe is still around an average of 6 transactions, depending on your price point, then your check comes in at 9,000. Whoops. And your net is 9,000. I know in my market center, the only thing we take out after you're capped is $25 to pay for your E&O insurance. And every market center might be a little bit different there. But so the more real estate you sell, the quicker you cap, the higher your net on each transaction gets. Does that make sense?
Hey, Amy, it's Tony in Salt Lake.
Hi.
The one thing when you say you net 9,000, the reality
The
is
cost of sales.
you don't net like 3,000 because you still got to pay your taxes. and you gotta
Absolutely.
pay your business expenses per se.
Yeah, this is just an example of how the cost of sales will affect. So if it's with Keller Williams, since you cap, those cost of sales are only going to affect you until you cap. And then that will affect your net number. But yes, that bottom net profit number, you're still going to divide this up and do it as a sound business and put money aside for taxes and put money aside for your expenses. But the amount of money that you get to then divide up into that is more because your cost of sales is less. Does that make sense?
Yeah, thank you.
Absolutely. Okay.
Can you remind us what what the cap is, like the amount and what the royalty amount is?
Royalty is always 3,000.
Okay. And is the cap different?
Can vary for market center. Are all of ours the same, Novalee?
Park Cities is different when it comes to the cap.
Okay.
But the rest-
In St. George are the different ones. In Utah, everyone else is.
That's right. Park
$1,000
City is
cap.
different too.
Okay, so Park City and St. George are going to be kind of different.
The rest are 15.
Yeah, the rest are 15 for company dollar and 3,000 for royalty.
Thank you.
You bet. Okay, so what goes out? Those operating expenses. So these are what you have to pay whether you make a closing or not. You've got rent, your car payment, if you have staff that's on salary, insurance, any professional services you pay for, marketing and advertising, equipment and supplies, and any education that you're paying for. These are things that are going to come out of your expenses, whether you had a closing or not. So those are going to be your operating expenses. And then what is left over at the end of this is the net profit. So that's what you can use to grow your business and invest in your future. Okay, this is the real deal here. We're going to figure out how much you need to make to get the profit goal you want. So this is where that scratch paper is handy. And we'll just kind of go through this a little bit. This will help you set some goals that maybe you don't have already, okay? So this will be an outline of your business plan built off of your profit goal. So we're going to back into that a little bit. So write down your net profit goal. So how much cash you want in your bank account at the end of the year. And let's say, just for the example, that's $250,000. Let's see. Oh, I need to advance my slide. There we go. Okay, $250,000. So you're going to calculate the gross profit that you need to account for the tax liability on your net profit goal. So we recommend anticipating a 40% tax liability. I think it's a little on the high end, but I'd always rather have extra money after. So to calculate the gross profit goal, we divide our net profit goal by 60%. So if you take that and divide it by 60%, you get $416,000, 666. Okay. Now we are calculate the gross commission income you need to attain your profit goal. The formula to calculate your GCI is to take your gross profit and divide it by 40%. So in the MRE model, if we're able to keep our budgeted expenses to 30% and cost of sales to 30%, we should be able to expect a 40% profit. So this is how much you need to bring in to net $250,000. Okay, so now we want to know, how many houses do I have to sell to get that GCI number, that 1,041,666. So this will vary by agent, but whatever your average sales price is, you're going to divide the GCI by your average commission income. So for the example here, they did $7,500 in commission off of the deal. So,
Hey, Amy.
Yeah.
Question for you. Is there somewhere on like our reports on KW that we can find those?
I will show you where to find your lovely reports with all these beautiful stats on them.
Thanks.
So if we divide that by 7,500, it says I need to close 139 homes. Okay, so now if we take that GCI multiplied by 30%, it's going to tell us how much. Well, that's the team GCI. Sorry, I want to see these are the amounts of your anticipated cost of sale. So if you're a team, it's going to be higher. You're solo, it's going to be less. And we will have our operating expense budget. So you're going to multiply that GCI number by 30% because we spend 30% on expenses. And that gives us our annual budget of what we have for expenses if we want to hit $250,000 in profit. We need to sell 139 homes and we need to keep our operating expenses budget to 312 or less. Does that make sense? That's probably maybe the most math we have to do during this class. But if you do it, now you have a goal of how many homes you need to sell this year.
Amy, I have a question for like an agent that is newer and we don't have like you know, like Lori was saying, like somewhere where we could do an average. What would be a good, would you be able to tell us like a good average to do just so we can have that as a goal for the homes, the GCI?
For like the average GCI?
Yeah.
7,500 is probably a pretty safe. You're going to have some that are more and you're going to have some that are less, but that's, you know, a fairly good average to base off of. And then as you sell homes, KW tracks your average sales price for you. So I can show you on our reports where you can pull that and you can use that to fine tune this over time as you get that information.
Okay, thank you.
Yeah. Okay, so what is at least one action that you want to take as a result of what you've learned here?
I'm going to get my P&L done.
Love it. Anybody else? Any ahas that you're like, oh, I need to go do that. I'm not doing this and I should be, or.
I'm going to set up my business account. I haven't done that yet, so I need to do that.
Awesome. Anybody else?
I think for me, I think I like seeing the numbers. So like knowing like what my goal is for how many homes even lead generation, like how many people I have to be reaching to be able to get to that goal, like helps me see it, like the numbers.
Yeah, if I know what my goal number is of how many homes I want to sell, I can just drive myself toward that number and focus on that number. And if I'm sticking to my budget and my finances are in order, I can just tunnel vision that 139 homes and I'm going to hit all my goals. So it's really nice to have that number that you can work towards and it's right in the front of your head all year long. So for sure. Anybody else? Okay, I'm going to turn it over to Novalee.
Okay, Jordan, can you
Yes,
come off
ma'am.
mute for a minute? Can you tell everyone where they can be playing with those numbers in Command when it comes to how many homes they need to sell?
Oh, yeah. If you log into command under goal setting, you can go and adjust and play with all of those numbers and set what your GCI is, what you intend your expenses to be, and it will spit out exactly how many appointments and how many leads you need in order to achieve your goal.
So not only how many houses you need to sell, command will tell you how many leads you need to generate, how many phone calls you need to make. It will take it even further down, break it down even further than that, right?
Conversations, how many
Conversations you need to have. So it'll break it down even further than that. So if you don't know how to do that, find your Market Center Tech trainer and take it even further. Does that make sense?
Yeah, thank you.
My job is done.
Okay, so I'm going to share my screen. And let's see if I can find slideshow. Let's talk about your financial team and what that looks like. As a business owner, you need a team behind you. And let's talk about who should be on that team. You need to have an accountant or a bookkeeper. If you are just getting started in the business, congratulations, you now have the title of bookkeeper until you are in a position to afford one. But even then, you can find a bookkeeper who could do your P&L for bookkeeping for so I have an accounting business on the side, right? Because that's how much I love numbers, right? So I charge $100 a month and I do the books for my clients. And every month, at the end of the month, they get a profit loss statement. We review that as an accountability piece, right? So you could find a bookkeeper for $100 a month and automatically have that accountability meeting on the calendar. If you're not ready to spend $100 a month, then you can do your P&L yourself. Gordon just emailed you a profit loss statement in Excel that we are going to walk through and do your P&L by the time this class is over. So you're going to be able to have that by the end of this class. And until you're ready to pay for it, you can do it yourself. When you are ready to pay for it, don't pay more than $100 a month. When you are ready to be more advanced than that, you can hire an accountant. You can expect to pay $50 or $60, maybe $75 an hour for that. So I'm trying to tell you give you advice, right? So that you don't overpay for that. But you want someone who has a clue about real estate, who understands commission income, who understands splits and tax implications of 1099 income. Does that make sense? Any questions on that? So you are all now bookkeepers, CPA, tax advisor. So here's my one piece of advice on this. If you don't meet with your tax advisor 3 times a year, if they're not willing to meet with you 3 times a year, fire them. You need to meet with them in June or July. You need to meet with them in November. And then you meet with them when your taxes are filed. And that is a minimum. Those are the minimum number of times you need to meet with your tax advisor. And why would you need to meet with them in July, June or July?
Membership dues.
Okay. What's another reason?
You're halfway through the year. You should probably make sure that you're on track for taxes and everything.
Yeah.
Because you don't want to be like Jordan and get to the end of the year and go, holy shit, I have to file taxes.
Yes, there's that. Okay. Why would you need to meet with them in November? Taxes aren't due till,
Because if you're a top producing agent, it might be time to go get that new car so you can pay less in taxes.
That's right. I had an agent come to me in January and she was all upset because her CPA said, if you had come to me in November, I would have told you could have saved $40,000 if you had gone out and bought a new car. And now she's going to pay that much money in taxes, right? So if you go see them in November, it's not too late. Find out what the tax liability is at that point in time. It's not too late to make last minute adjustments. If you are an S Corp, your taxes are due March 15th, not April 15th. Don't make that mistake. If you file as an individual or then your taxes are due April 15th. So get a tax advisor, a tax person who has a clue about 1099 income. Make sure they're willing to meet with you multiple times throughout the year. And if not, fire them and go find a new one.
And by the way, Nova Lee, thank you, thank you, thank you. You saved me $30,000 on that tip alone.
Well, thanks, Gordon. That's awesome. Appreciate that.
You're the one that pushed me to buy the SUV.
Awesome. I love to hear that. Also on that, tax advisor, I lost my train of thought. Oh, referrals. Talk to friends, talk to the top producers in your market center. Find the good ones. Don't find your uncle's cousin who does it on the side. If they are not only doing taxes, in Nova Lee's humble opinion, they're not spending enough time studying and learning all of the laws and the changes. I don't think you're getting the best person if they are doing it on the side, and that is just my opinion. Go find someone who focuses on that and only does that, and that is their life, because the laws, the tax laws change so quickly and so much. They would fill my office. The tax code, right? Just in books. So find someone who only does that. I recommend you have a relationship with a banker that you can call on the phone and say, hey, what about this? What about that? What about interest rates? What about, what do you recommend for this or that? We have, between the 4 market centers in the Salt Lake and Utah County, we all use the same banker, and the reason that we do is because we have them on speed dial, and that's a huge advantage to the owners of the market centers, that they have one person they can call. Attorney. The financial team should include an attorney, help you get your entities set up. You can do that yourself if you have, when it comes to setting up your first entity, if you are so inclined, insurance agent, and a financial planner. So that should be your financial team. You are, again, as Amy said, you are a business owner. As a business owner, this is the minimum size of your financial team. And if you don't have these people, let's get you these people.
Yeah, that's my question. I think for like, I don't know any attorneys. So like, is that more something to reach out to other agents and just get referrals?
Yeah, for sure. That's number one thing. And I hate that this class has to be Zoom, because it's so much easier to do it in person, because then I would just have you go talk to people in the room and find someone who has that person, right? So it's a little harder to do it over Zoom, but go talk to the top people in your market center and get referrals. Because they most likely have someone that knows this business and does a good job. And so go ask them who they use. And they probably can tell you who not to use too, because they've probably got referrals for that too.
Thank you.
So I think that there's a page in the manual. I was going to try and keep up but I think that there's a page in your book on page 23 where you can write down who you have, which of these people you have, and which ones you don't. So I'm just going to give you a minute to write down who you do not have, and maybe under the take action, put down the name of somebody that you're going to reach out to get a referral for someone in one of those, several of those categories, not one, several. And then I want you to put a date next to that name. By when? Going to reach out to this person? By when? How many of you meet with your tax person more than once a year? Oh, okay, great. At least one person I can see raise your hand. Does anybody meet with them 3? Okay, that's a new minimum standard. 3 times a year.
Novalee, I don't know why you ask questions you don't want the answer to.
I know, but Jordan, you know, you've learned your lesson.
Yeah, we'll keep saying that.
I am your accountability partner for that, dude. Okay, banker. Let's talk about what kind of bank accounts you need. As a business owner, as a real estate agent, to follow the model, these are the bank accounts that you would need: a business checking, business savings, a business credit card, a tax savings, and then you would have your personal bank accounts. If you are very good at paying your credit cards off in full every month, great. I want you to have a business credit card. They are way more secure than a debit card. And that's awesome. If you have a hard time with that, it's riskier, but go ahead and get a debit card. Why is that? Especially in this current market.
Because the debit card won't allow you to spend money you don't have.
That's exactly right. That's exactly right. So, especially going into a shifting market, it's as expenses, and we're trying to tighten up our budget, right? And income may get a little tighter. Sometimes it would be more tempting to put things on a credit card, and we don't want to do that. Gary Keller is very anti-consumer debt, especially in a shifting market. We want to be very careful that we pay that credit card off every single month. We only, and as a market center, we only use American Express. We pay that bill off every month. And it's obviously my budget at the market center is $125,000 a month. Like, so we have a very healthy budget, but that credit card, no matter what, is paid off every single month. And we do have all of those accounts. We actually even have more than that. So those are the minimum accounts that you will have. How many of you have those accounts? Good. Okay, great. If you don't, I want you to, on page 24 of your manual, write down.
Novalee, what would be the difference between the purposes of a business savings and a tax savings?
So tax savings, you are only going to use that money to pay your taxes. And so there's a specific percentage that you're going to put in there. And then a business savings would just be just a savings that you could use for if you had a particularly low month or something like that. Or if you were saving up for like to purchase another investment property or something like that. That would be a business savings, but tax savings account is only for taxes and you do not touch it for any other reason. And that's why you want to put that in a separate account.
That's awesome,
okay?
Thanks.
Mm-hmm. Okay, so write the date down when you're going to get those accounts if you don't have them set up and ready to go. Okay, so let's talk about, I don't think the slides show too much more about entities. So let's just stop sharing and we'll just talk. Let's talk about business entities. A little bit. So, how many of you have a business entity set up? Few of you. Okay. This is how I teach. So I teach this class a lot. And usually the people who come to this class when I teach it in the market center are the agents who just joined the market center and they've been in the business 2 weeks. And I tell them, let's get you in the business 6 months. Let's see if you like it. Let's see if this is something that you really want to do before we start going out and creating entities and companies, right? So, so the first thing that we would do is let's make sure this is what you want to do. So let's give it 6 months. If after 6 months you are loving it, you're having closings, this is what you want to do, then let's set up an LLC, a basic LLC. This will protect you. The first checks that you get in are going to be paid under your social security number. You're a sole proprietor, you're at risk if someone sues you, right? So we want to minimize your risk for that. So we want to get you into an LLC where you're more protected and your tax liability is less. So I tell everyone 6 months, or once you're hitting around the $40,000 GCI, we've got to get you into an LLC. An LLC costs $70 to set up. It is so simple. You can do it yourself on the state website or have someone who has done it before help you. And then you start having some protections and some tax advantages set up. That's an LLC. Then the next thing, you're rolling. This is, you love what you do. You're $40,000 in GCI. Then we can have that LLC converted to function as an S corp when it comes to tax purposes only. And then that way, so it's an LLC that functions as an S corp for tax purposes. That's what most of our top producers are. That has huge tax advantages, very much protects you as an agent. And that's the way most of our bigger people, top producers, do it. And that's the way I recommend you go. However, I recommend that you go talk to your tax advisor that you're going to meet with 3 times a year, because there are so many things that factor into that decision other than you being a real estate agent. Are you married? Do you file jointly? Do you have other 1099 income from your spouse? Or do you have W-2 income? All of that comes into that tax return, and all of that comes into play. So it's not a one size fits all, and your tax preparer is the one who's going to really have the best advice for you on what entity you need to set up. But you do need to have an entity that's going to, number one, protect you in case anything happened, and number 2, for tax advantages. It's just which one you go through, and the best person for that is your CPA. Lisa said she has an S corp. Most of us have S corps. That's what I have. I love the S corp myself because of all of those things that I talked about, all of those reasons. And when we talk about taxes and things that can be deducted, I will tell you why, some of the advantages of that. But I don't think, let's go back to the PowerPoint real quick. Where'd it go? Okay. Partnerships are a little harder. Again, we already talked about yes, correct. Okay. If you don't have an entity, make an appointment with your tax preparer to decide meet with him, decide which one you're going to go with. Okay, let's talk about taxes. Estimated taxes, I think it's around $100,000 in income when you need to start doing the quarterly tax payments. If you go with the S Corp and you start putting yourself on payroll, you can not have to worry about this kind of stuff. So I hate even talking about it. But if you decide not to go to an S Corp and I don't know why, you shouldn't have to do these kinds of things if you're set up correctly. But if you're not set up correctly and you do have to make quarterly payments, these are the dates that they are due. Let's say that. The hardest thing in the world to understand is income tax. Albert Einstein said that. I believe that. It's awful. So find a good person. But let me give you this caveat. The best people are hard to get into and they're very, very busy. So plan ahead. Don't give them a call on April 13th. Well, you better have an S Corp or an LLC. So it would be March 13th and want them to file your stuff by March 15th on the due date, right? Plan ahead because the good ones are busy. Income tax, you have federal, state, we don't have local here. Self-employment tax, if you are not set up as an entity, you will have self-employment tax. And employment tax, that means payroll taxes. So Jim has a profit goal of 140,000. He wants to pay himself a salary, and he wants to take all of the income, put it into his account, and then he's going to pay himself a monthly salary of $11,000 instead of just taking money out every time he gets paid. He just wants to take out a monthly salary. Does that make sense? Just like he was on W-2 income, he just wants a steady amount every month rather than it varying depending on how much he makes. Not many real estate agents are disciplined enough that they actually do that, but that is a recommendation. I actually think that's a great idea. I think, especially in a shifting market, if we could be consistent about that kind of thing, I think it would be wise and help us stick within our budget if we did it that way. So he pays himself $11,000, he saves for taxes, and then he puts the rest aside for his personal expenses. And that $7,000 is what he transfers into his personal bank account. Pay yourself a salary. I advise you do that. If you have an S Corp, you're required to pay yourself a salary or you cannot have an S Corp. Okay, let's talk about, most people who take this class, that's what they want to talk about is taxes, which is everybody's usually least favorite topic, but that's the questions that I get the most. So there's a difference between deductions, exemptions, and credits. What's the difference between a deduction and a credit?
Deduction is a dollar deduction from your, probably not, yeah, well, we'll call it, sorry about that, from your income, your GCI, and your credit is a dollar for dollar deduction off of your tax bill.
Okay, great. That's awesome. All right, so if you look at this list, can you tell me which of these are personal expenses, which of these are business expenses, and which of these are both?
If you're smart enough, all of those can be both or business expenses.
Jordan? I'm going to mute you. All right, accountant fees, would that be personal, business, or both?
Both.
It would be both. Automobile.
Both.
That would be both. Business cards.
Business.
Business.
It would be business. What about cell phone?
Both.
It would be both. Clothing.
Personal.
Okay, there's an exception to that. If you get clothing that has your logo on it, like Jordan is wearing, that is a business expense. You can't go down to Nordstrom, Jordan, and buy a new wardrobe and write that off and say, because you're a real estate agent, you have to dress nice. And so you want to write that off. The answer is no. If you get clothing and put a logo on it, your business logo on it, yes, you can write that off.
I
Does that make
embroider
sense?
my business logo onto every article of clothing I purchase.
Okay, well, you have to defend it. That's all I'll say about that.
What
Computer,
about KW brand items?
yes. So if you buy a KW hat, yes, you can write that off. Computer,
Oh. Business.
it isn't that, okay, so this is me being recorded. If you use it, where's this? Let's see. I'm going to read this quote. Where did it go? There's a definition, which I thought was interesting. When it comes to deductions, regularly and exclusively essential for business. Regularly and exclusively. So if you can prove that the computer is used regularly and exclusively for business, you can write that off. So if the IRS chooses to audit you and they come to your home office and they go in there and they say, show me your computer, and they pull that up and you have Pinterest in your search history, they're going to deny that request. Well, Pinterest, you could say it was for staging, so maybe that's a bad example. Let's say Scrabble or something like that is on there, they will deny that computer, right? If it's only the MLS, you're probably okay. That being said, the IRS does not conduct surprise audits. Moving on. Groceries.
Personal.
Personal. Yes, you cannot write off going to Macy's to buy milk. Okay. Health insurance.
Personal.
Personal.
If you have an S corp, you can write off your health insurance premium on your W-2, on your payroll stub through your business, because you are required to do payroll to yourself. If you have an S corp, you can write that off through your business. It's another reason you want to have an S corp. Pay yourself. You are able to write off that health insurance.
Hey,
Okay.
Nova,
Yes.
back to groceries. If I have a client event and I buy, I get it catered, would that be a business expense?
I believe it's a 50% business expense.
Okay.
Save your receipts.
No, because that's marketing. Marketing is 100%. Business meals, if I'm traveling.
Business
for a
meals are
business
50%.
meal, That's 50%, except for
Marketing is 100%.
there's
You
a
are correct.
certain time clause right now, you can write off 100% of business meals. But if you have a business meal with a client, then it becomes a marketing expense, not a business meal.
Depends on how you write it off, label it in your books, right?
Exactly.
Jordan?
I don't ever go on business meals. I never eat alone. I always market to somebody.
And you have to make sure that you write down who was there and you have your receipt. Those are the requirements. Home mortgage or rent.
Lee, I have a question on the health insurance.
Uh-huh.
So what if your health insurance is paid through like my husband has our health insurance, but we pay a portion of that premium? Does that make sense?
I don't think you can do it that way.
Okay.
But talk to your CPA. Because
Okay.
maybe he can find a creative way of doing it.
Okay.
I just don't know what that would look like.
Okay.
But he might be able to put, because I own my accounting business. My husband is on my board of directors. So the insurance policy is in his name. But I pay the premium, but it shows up on his W-2. Anyway, so there are, you may just have to structure it a certain way.
Okay.
But yeah. Home mortgage. Personal or business?
Personal.
Personal. Now the IRS did change a few years ago, the home office deduction. It is a flat fee. You don't have to track your utilities and add all that up in square footage and come up with a formula and percentage and all that. You don't do that anymore. There's just a flat amount and your CPA will take care of it. And it's very simple now. Very basic compared to what it used to be. Home office.
Business.
Business.
You have a home office with a treadmill in it. You can't write off. What was that phrase that I used? Exclusively? Exclusively for
Well,
business.
you can have a room that you're using exclusively for business, right?
So if the IRS is going to come, notifies me that they're going to audit me, and I have a treadmill in my office, you could be darn sure by the time the IRS gets to my house, that treadmill won't be there. Because it's exclusively for business use. There won't be anything in that office that is not business by the time the IRS gets to my house. Because I don't want them to deny that business expense, right? Just think through it, right? Before they get there. Home utilities, all of that is all rolled up into that one fixed expense now. Meals, like Jordan said, meals are a 50% deduction. Marketing is 100% deduction. So my husband is on my board of directors of my S Corp. When we go out to eat, we always talk about my business. It's a 100% deduction. I don't write off meals. I write off marketing. There is not a meals deduction on my profit and loss. There is marketing written off on my profit and loss. But there are no meals. Membership in a professional organization. Personal or business?
Business.
Business. Membership to a gym.
Personal.
It is personal. I have people fight me on that one. You can do what you want and talk to your CPA if you disagree with me. I can't think of any way to justify that. I think that that's probably a personal expense. Movies or theater.
Personal.
I know some people would take a client and write that off as a marketing or whatever. I don't do that, but I know some people who do. Travel to family reunion.
Nobly, if you were to do that as an event, though?
If you host a movie event, that's absolutely 100% deductible.
When you say family reunion, are you talking about KW family reunion?
Yes, KW family, yes.
Oh, business.
Okay.
Yeah, definitely business. Vacation.
Personal.
What if I go and visit a KW office on vacation?
Okay. Are you going to take a class there while you're at that KW office?
I took some business cards.
Took some business cards. Okay, so
Building
this one is
referral network.
this one. I am going to let you use your own discretion.
I'll talk to my CPA.
Talk to your CPA because this one varies from CPA to CPA, and they are the ones who are going to have to defend you if you're audited. So get their feedback.
So Nobly, what about if my S Corp's board meetings are held in Hawaii this year?
Then you and anyone on your board can write off the travel and probably one night in the hotel. So My daughter is also an accountant. She is on my board of directors for my S Corp. We happen to hold our board of directors meeting every year in Anaheim, right next to Disneyland. So my husband and I all travel. It's written off. One night in the hotel is written off. The Disneyland tickets are not written off, right? That is not a business expense, but the travel to and from is. We have corporate minutes of the meeting that is held there. You are required to have an annual stockholders meeting when you are an S Corp. We have those meetings. They are recorded in order to justify that. And then the meals and everything while we are there is not a business expense. Website fees.
If used for
On
business.
the website?
Your agent website fees.
Business.
That's a business expense, absolutely. Okay. Amy, I can't see the chat. Can you answer any questions that are coming up in there?
Yeah, let me see.
Thanks. All right, any other?
Sorry, what was the membership and professional organization considered?
That's a business expense for sure. That would be like WCR or I don't know, board dues like NAR, that kind of thing.
Okay.
Any other questions on, now I am not a CPA, your CPA. So my opinion and your CPA's opinion might be different. He or she is the one who's going to have to defend you. So I would strongly suggest you talk to them and get their opinion. Some are more conservative than others. Find one that supports your thinking in this area. This is something that you have to feel very comfortable about and own it, right? Like, look at your tax return, make sure that you understand what is being written off and what isn't. And you need to be able to track these things at a very high level so that you know what is being written off. I had an agent come to me once and said, she's still an agent in this county, and said, I haven't filed taxes in 7 years. All of my receipts are in a shoebox for each of the last 7 years. And she had to go turn those into someone and have him go back for 7 years and file her taxes. And it was ruining her health. She was so distraught over the whole process. And if she would have just done it at the time, she ended up getting money back. So if she would have just done it at the time, it would have been so much easier and better for her health and her family if she would have just done that. Don't do that. So know your numbers. You should be knowing your numbers every single month, but know what you need to be tracking and write it off, right? Don't, the better you are at tracking, the more things you'll be able to write off, the more money you'll be able to keep at the end of the year. If you're not tracking things, then you're going to miss out on deductions. And the better relationship you have with your CPA, the more deductions he or she will be able to help you find. Does that make sense? Any more questions on taxes? Okay. That's what their recommendation was. Did we disagree with any of those? I think we agreed. Great. So a couple of key ones that they, auto, home, entertainment, business, those are the ones that we talked the most about. All right, after talking about that, what action items do you have to take when it comes to taxes?
Can I just ask a quick question about automobile deductions?
Yes.
So if you're doing the mileage deductions, how do you know what is considered business travel versus personal travel? So, because I was talking to my sister-in-law about this because she is a business consultant. She helps people get their businesses running. And she was like, I'm pretty sure that If you leave your home to drive to an open house, you can't write those miles off because your home is not your office. But she wasn't sure. But she's like, but I think if you drive to your office and then from your office go to your open house, then you could write those miles off. It would be considered business travel. But I'm like, but so many people are working from home now. So how do you know what would be considered business travel versus not?
Anyone have an opinion on that?
Driving to an open house is not your regular commute to work. So leaving your house and driving to an open house would be considered business mileage because that's not something you're doing every day to commute to just your office.
I agree. I would definitely count that.
What about like showing, like taking, you know, your clients, like whether it's a buyer to show a house, because that's part of our job, even though it's not going to work.
Again, the only business mileage you can't write off against your taxes is the mileage you're using to commute to the office. So if I leave my house in Linden and drive to my office in Orem every single day for work, that is not business mileage. That's just me commuting to work. But if I leave my house to go show homes all over Salt Lake Valley, that's all business mileage.
Oh, okay. I got it backwards. Okay, thank you.
There are a lot of great apps you can download that'll help you track your mileage if you're going to do that. And you can just, you know, start it and stop it. And it makes it really easy to total up what you had.
Who uses an app to do that? What do you use?
Mileage IQ.
Mileage IQ is one.
Yeah.
Good one, yeah.
I use Everlance.
Okay, great.
I think QuickBooks has a good one too.
I have to disagree with that. It's from your office to the open house or wherever. From your home to open houses will not count. It's where you usually conduct your business from. If you have a home office, that's a legal home office, they don't count that. But if not, it has to be from your office to the open house. I know that because I used to work with the IRS. I used to work at our department, and that's what we used to go by.
So if you split your time 50-50 between your home working and an office working, you would still be able to deduct it though.
It depends.
What if you you office at home and you go to the KW office to take a class? That would be deductible, right?
No.
Again, I would review all of that with your CPA. Like everything in the tax code in general is always going to come down to, well, it depends.
Mm-hmm.
So I would write off what you feel like you can honestly and genuinely justify. And I mean, at the end of the day, we're all praying we don't get audited. It's a pretty slim chance unless you're out here making several $1 million a year that you're going to get audited. So I would write off what's justifiable. And at the end of the day, it's all the concept of innocent until proven guilty. So the IRS has to prove that that was not business mileage you used. You can get lost in the weeds on stuff like that all day long. I would write off what you feel like you can reasonably justify to them. And that's that.
Your CPA is going to be with you in that audit, so make sure that you and that person are on the same page. Any other questions on that? Despite the tax law being big enough to fill my office with the books, it's still ambiguous. And that's why I say make sure that you and that person are on the same page. Cool. Let's take a 10-minute break. Make sure that you come back with your bank statement from last month because we're going to work on your personal P&L when we come back. Actually, let's give you 15 minutes, right? So it's 10:25. Let's come back at 10:40. Have your bank statement with your income and expenses from April when you come back. Amy, do you want to turn on some music? And we will be back in 15 minutes. Thanks, everybody. Gosh, how come that goes so fast?
Amy, how did you get access to my playlist?
We like the same stuff, Jakers.
That didn't seem like 15 minutes, did it? Jeepers. Okay, so let's talk about the difference between goals, what we expect to hit, and the big vision that Amy talked about at the first, and what we actually hit. Which is what we're going to talk about next, right? So we talk about what budget is, what we expect to hit. Now we're going to talk about what we actually hit. And that's reviewing numbers after the month is over. And that's what results in our profit and loss statement. So let's talk about that. We have two scorecards that determine the health of your business. Does anybody know what those two scorecards are called? Any guesses? None?
Balance sheet in your P&L?
Oh my gosh, that's a great answer. That's exactly right. So they're called a balance sheet and a profit and loss. The income statement tells you what you made, what you spent, and what's left over. And the balance sheet tells you what your assets are. That's what you own, right? That would be cash, computers. If your personal balance sheet would be your home, your cars, things that are worth money, your liabilities, what you owe. So in your business, it would be credit cards. Shame, we're going to get those paid off. Lines of credit, balances on your car, if your car is owned by your business, that kind of thing. Equity is what's left over. It's what the assets minus what you owe is equity. That's what your business is worth. If you ever apply for a loan, like an SBA loan or a business loan, they are going to want to see your personal financial statement. When a lot of times a bank will call a balance sheet a personal financial statement, they're going to want to see all of your assets, and then they're going to want to see what you owe, and then the difference is what your net worth is. So that's the difference between a profit loss and a balance sheet. A balance sheet is as of a particular day, like whatever day you create it, it's as of that day, and a profit loss is for a specific period of time, right? So a profit and loss can be for a month, it could be for a quarter, it could be for a year, but a balance sheet is always as of a certain date. So that's the difference between the two. So if you could read a nutrition label or a baseball box score, you can learn to read a basic financial statement. I have had 5 team leaders over the 13 years I've been here. If I can teach some of them to read a financial statement, I can teach all of you. Actually, I've been lucky. I've had 2 of them, Johnny and Shoni, have both been really had a financial background that have been awesome. Some of the others, not so much. So let's talk about an MREA profit and loss statement. You could download this from Keller Inc. And go to the MREA book and download this statement, this P&L. I also had Gordon email you a profit and loss in Excel this morning that has that is set up exactly this way. And all you are going to have to do is plug in your expenses into each and income into each of these categories. The MREA, Gary went out and interviewed a bunch of successful real estate agents and found out how much they spent in each of these categories, and these are the percentages. Now, they have changed slightly, and I sent out along with the profit and loss to you, the most recent percentages. Did you get those? If you did not get those, please make sure and put that in the chat, and Gordon can send, actually. Gordon can send those out to you so that you have them. Did you all get those? The profit. So what is the P&L and what is the current MREA percentages that you should be spending in each category? Because we're going to need those as we complete your profit and loss for April. And did everybody come back with your bank statement for April with all of your expenses on it? If not, go grab that and you will need a calculator. But we're going to walk through what that statement looks like, walk through what a P&L statement looks like, and then we're going to work on yours, okay? Let's go back and do that. I hate not seeing your faces, but let's do this. All right, so income will go up here. Commissions, again, like Amy talked about, 30%. Cost of sales will go here, and then your expenses will go here. And then the profit goes here. These are the percentages that you should be at or under right here. And those are built into that spreadsheet that you were emailed. So here is a sample. So this person brought in $260,000 in income for residential and $10,000 in commercial, for a total of $270,000 in total income in GCI. Their budget was $275,000, so they didn't quite hit their budget, right? The cost of sales was $60,000. I don't know why it says total commissions paid out, but I'm wondering if that was a referral fee. So this agent must have been capped and they paid out $60,000. And so their gross profit was $210,000. And then below there are all of the expenses that they spent in each category. So their budget for salaries was $48,000 and they spent $43,800. So they were under budget, right? So if we go back to this spreadsheet, how much should they be spending on salaries?
15%.
15.5, right? So they spent $43,800. So how did they do?
Way over.
43,800 divided by 270. So somebody do the math. What percentage did they spend?
16.2.
16.2. So even though they were under budget, they went over the standard, the percentage. They spent more than the MREA model, right? So that might mean they need to do some tweaking. So that's what I would like you to do as you prepare your P&L. We're going to plug your numbers in here, and then I want you to go check each of your numbers against the MREA percentages in that category. Does that make sense? Okay. But we're going to build a summary P&L based on last month. So the one that I gave you is very, very basic, but let's go over, this one is very involved one. If you ever got to the point that you wanted one this involved, you could get this one from Keller Inc., where it was broken down between residential, commercial income, commissions paid out. So commissions paid out, Amy went over cost of sales. This would be I can only think of 6 things that this would be. Company dollar, royalty. If you're a rainmaker, it would be your buyer's agent or your listing agent, right? If you were on a team, it would be your team split or a referral fee or E&O. I can't think of anything else that it would be. You could break it down between salaries. You could take it all the way down to this level. I don't recommend taking it down to this level unless you have a big team. Like, I think this could be intimidating and overkill, but you could. And this information is in your manual if you want to go to this point. I just wanted to know, do you have any questions on anything that's on any of these lines? As I go through these, and then we're going to go back and work on yours. Anything here? No questions? Okay, so there's a case study in the manual. I would rather skip the case study and do your own. Anybody disagree with that? All right, let's skip this. And let's go to shoot, where is it? It's buried under here. Okay, you should have all been emailed this document right here. Can all of you see this? All
Not
right.
yet.
You can't see it yet? You are screen, it says I'm screen sharing.
What
I
are we
can see
looking
the
for?
screen
I
share.
can
It's
see it.
a little small still.
Okay, it's too
A little
small.
bit bigger.
Okay, make it bigger. Jordan,
Yes,
what's the Mac to make it bigger?
Command plus.
I usually use a Windows machine.
Oh, that's zoom in your,
It's not working.
it's probably trying to zoom in on your screen. You might have to stop sharing and then zoom in.
Okay. If I remember right, it won't let me edit the spreadsheet because it's locked. Shoot. Shoot.
Make a copy of it.
Yeah, I tried that the other day and it wouldn't let me.
Your top left-hand corner, just hit the green. On the top left-hand corner, you have a red circle.
Uh-huh.
Hit the green one.
Oh, okay. Now, but how do I get to the? Now I need to share the screen though. Okay.
There you go.
That looks great.
Okay, you can see it now?
Yeah.
All right. So this is page 1. Of the spreadsheet.
You're looking at my screen, Nathalie.
They're looking at yours.
Yes. So tell me where you need to drive.
Oh, yay. Okay. Well, let me minimize mine. Thank you. Okay, awesome. So Jordan has the first page of the spreadsheet up. Up at the top is in the green is the income section where you can break it down between listing income, sales income, and referral income. And that is the GCI number. That's the gross amount. That's the amount that comes from title, not the amount that hits your bank when you get the direct deposit, right? Does that make sense? So you need to know your numbers because you're going to have to break this down. All of this information is on your DA. Your DA tells a story. I teach a class on how to read your DA. So you're going to need your DA. The orange section is the cost of sales. It's where you're going to put your company dollar, your royalty. If you're a rainmaker, how much you paid your listing specialist or your buyer specialist, if you had a referral. The only thing that doesn't show is E&O, so I would put that under company dollar. And then your gross profit is going to automatically compute what is left over. That's the amount that's going to match the deposit into your bank account. It will compute itself. Then the expenses are the categories that we just went over that have those same percentages that are from the MREA budget model. So you're going to take the bank statement that you just got, and you're going to figure out how much you spent in April in each of those categories. And you're going to plug that amount in the April month. So Jordan is in, the first column is January. So you're going to go over to the April month, and you're going to plug in your expenses in that month in each category for the month of April. So this is a workshop. Get it out, get your statement, and I want you to actually do that. Plug in the expenses from April that you spent.
How much did I spend on lead generation in April, Nivalee?
0.
How about occupancy?
0.
Technology?
$28, because that's our consortium fee.
Oh, my phone's $70 a month. Supplies?
Did you go to Office Depot?
Do I use paper?
No.
Education and dues. I paid my dues. Those were what, $9.60?
And did you pay the MLS?
Oh, that's true. I paid the MLS. That's what, $45?
How do you calculate the MLS if you pay it all at once for the year? Do you just divide it by 12?
You could do that, or you can put it in that month, whichever, because cash, you are on most likely on a cash basis with your CPA. He's going to want you to write it all off in the month that you paid it. But in your so if you wanted to know, like in your budget, you could divide that out. If you wanted to know like how much you're spending every month as an average, you could divide that out. But when it comes to this report, you should do the cash that you spent. So I would write it all off in the month that you spent the money.
Novalee,
Uh-huh.
for income, do you count, like personally, because I'm sure probably everyone chooses one way or the other, do you count a closing based on close date or a date, the date that it hit your bank account?
Your cash basis. So it's going to be the date it hit your bank account.
Okay.
So equipment would be, did you buy a new computer? Did you buy a new, well, phone? Cell phone is one of those things you need to talk to your CPA about, debate, but some kind of like, did you buy a camera? Do you take your own photos? Something like that. Auto would be, if you are on a lease, you can write off the lease payment. Even though I strongly recommend you don't do a lease ever. Auto would be, if your auto is owned by the business, then you would write off.
What's your auto
Payment
payment?
or
Mine's
what?
disgustingly high.
Yes, your auto insurance can be written off. I deduct, for this purpose, I deduct my, and this is how Novalee does it. I deduct my auto payment, my auto insurance, and my gas. And then at the end of the year, when I meet with my CPA to do my taxes, then we can convert it. I have 2 vehicles that are in the business. One is owned by the business, and so I can't deduct all of those things. Then the other one, I do deduct mileage on. So we work that out then, but I want to know what expenses I spent particularly related to auto that month. So I do put it in this sheet here. for that purpose, knowing that it's going to be a little bit off when I go talk to the CPA, because it's really hard to put mileage in there. You could put mileage in there because you can go to the IRS website, find out what your mileage rate that they are allowing right now is, and multiply that by the mileage that you drove that month and know exactly what your mileage deduction should be if you want to do that.
So let's say real expense, the way you write it off. What number am I putting in that? I can put mine in, but I just don't want people to have a hard.
So my number that usually goes in there is like $500. And professional services would be if I went to the CPA, if he filed taxes, if I met with my attorney, if I met with my financial planner, something like that, and then other. So did you have any income in April, Jordan?
Yeah, I closed 2 deals in April.
Okay. Break them down between listing and sales, and this is your GCI number. So this is the amount that came to the market center.
Ooh, that's a really good question.
No, Lily, if we're paying ourselves a salary on S Corp, how would you modify this?
So I pay myself, so I recommend, like, if you if you're making 100,000 a year, let's give, so this is very general, right? 100,000 a year, you're supposed to pay yourself as an S Corp what a normal salary would be for someone doing similar things to you. So 100,000 a year, if you, then maybe 2,000 to 3,000 would be the salary that you would pay yourself every month. And then you would just take a distribution for the other 5,000 that you would take out of the business, right? So you would put the salary there, not the distribution. So you would put the $2,000 or $3,000 under salaries.
Thank you.
Mm-hmm. And Zach, there's 2 ways of doing it. One is mileage, one is actual expenses. It's best to talk to your CPA to figure out which is the best one to do. I took a class just on this. Turns out it's best to do both if you can. So I have 2 vehicles, and then I write off 60% of one and 40% of the other in order to get the best tax deduction. I use 60% of one for business use and 40% of the other.
Okay, Novely, I have a question.
Mm-hmm.
Okay, so as I'm filling this out and I'm on a team, do I consider the GCI that was paid the total GCI, or do I put in just mine? Does that make sense?
Yeah, that one is a little bit different. I would probably just put in what you got, what you received
personally, not total of the
personally.
team. Okay.
And then still deduct your company dollar and royalty from that.
Okay.
I wouldn't put in the whole if you were on a team.
Okay.
You could, but
so I could do it and then count that as like cost of sale.
Exactly. Under like listing or buyer is where I would put what the team takes out.
Okay.
If it matters or is relevant, I do believe that Keller Williams, your numbers on the Keller Williams website will represent just what your gross income is.
Correct.
Absolutely.
Okay,
correct.
thank you.
Yeah, Adrian, that's the same thing that we did. We took mileage on our older car, and then when we bought the new car we wrote off in the business actual. We did the same as Adrian said in the chat. Okay, so Jordan. So his net income for April was $6,835.10.
We're also assuming I'm paying myself a salary of $10,000 in this case.
And so if you didn't pay yourself a salary, we could assume you took a distribution of that, right? So, okay, does everyone understand how to fill out this report? Is there anyone who needs us to go through that again? Speak now. Okay, awesome. Jordan, can you click on tab 2, financial analysis at the bottom of the page? Okay. So I have this set up. You're going to have to change the items in yellow, but this will automatically compute for you. If you go back to January and do it, it will tell you how you're doing year to date towards those percentages from the MREA spreadsheet. So Jordan, go change the items in yellow, please. So change the month to April. Change your GCI target. What is your GCI target goal? And it better not be 50 because you hit that.
I didn't hit my 50, did I? I hit 26 GCI.
Well, close. I mean, you hit it. Yeah. So
Well, that's a year-to-date GCI target.
Yeah. So change that.
So I'm changing this to my year-to-date.
No, change it to 120. Change it to 120 for the year, okay?
Yeah, so I'm saying that top one is my GCI target for the year, not for the month.
Yes, for the year, right? So you don't have an admin and you don't have a buyer specialist, right? So your listing GCI for the month is 14,000. Your buyer GCI is 12,000. So year to date, you're at 52% of goal because the goal is 50-50. And the model, best MREA model is to be 50-50. 50% of your income comes from listings, 50% from buyers. So Jordan last month was 52.48. So he's just slightly off, right? Okay.
It's heavy.
Okay, so his cost of sales was 34%. His expenses were 43% and his profit was 23%. So that's year to date. And then if you scroll down in the column G, it says where he is, is that 59.5, right? The lead generation. I need to check that.
I think it's 9.5.
It should be, because I thought I sent out is that polling? I sent out the MREA model, and if you choose your GCI goal at the top, it will tell you what the percentages should be, and you are going to have to go put in those numbers into that spreadsheet. See where it says
Lead
salary
generation, I should be
Yeah.
around 11.2%.
So if Jordan's goal is 100, his goal was 120, but under 150,000, his salaries goal should be 5.6%. His professional services should be 2.2%. So those are the numbers that he needs to go put into that spreadsheet under the goals section. Right there. So he does that, those things right there need to be changed. Cool. I thought I had it set that those would pull automatically, but those are going to change based on your GCI target. So you're going to have to change those. Okay, so click on the next tab at the bottom. Expense categories. So here's sometimes we're going along and we're categorizing our expenses and we're like, gosh, I cannot for the life of me remembered what I categorized that as month, or you have an expense that you only do 2 or 3 times a year and you can't remember. So this is where you cheat. You're right. So you're going to put cell phone, I categorize as this, and just make a list of what your regular expenses are and how you categorize them so that you're consistent every single month. Does that make sense? So I would write Verizon, and then I would write telephone, and I would write auto. What's an insurance company?
Allstate.
Allstate and insurance, right? I would just list all of your expenses and who you write the check to or who you pay and what expense category it's going to be. So if you ever have a question how to categorize something, this is your cheat sheet. You always know immediately what category to use. Does that make sense?
So category would be auto, expense would be Allstate.
No, switch. Category is who you pay. The expense is going to be what the name of the expense that you're going to put it in. Right? So it would be, yeah, perfect. So category would be Verizon, expense would be telephone expense. Accountaholics, which is my accounting business, that would be professional because I help Jordan with his accounting, right? Perfect. That's exactly right. And then he doesn't have to worry. I mean, I do his P&L, but he wouldn't have to worry about how to categorize it consistently because he has a cheat sheet for that.
So you could do like your mills under marketing per se.
Yeah, so you could put McDonald's marketing.
Okay.
Yeah. Not that I would do that, but that's the point, the idea of it. Especially because like Amy and I, with as many transactions as we have, we use accounting software, and unfortunately, we're not allowed to use QuickBooks because we have to use GAAP approved software. We use something called Account Edge. And so when I pay the same people over and over, I have it set up that when I write a check to like the people that we have the copier through, as soon as I write a check to that person, the expense at the bottom automatically fills out. So I don't have to remember what expense category to use because we use expense category numbers, not accounts. And I don't have to remember what that is. So this is just another way of doing it. No, Jordan, Lululemon does not count as marketing.
I was waiting for you to call me out on that.
Turkey, unless you get it embroidered with your name on it. Okay, so definitions. Do you want to go to that one? Okay, so these are the definitions that we've talked about before in case you forget and don't live in this life like Amy and I do. Cost of sales, that's something that you directly is tied to that transaction. That's like the money that's paid to the market center, right? A TC fee on that transaction. So those are just definitions for you in case you forget. If you ever forget, or have a question, that's what your MCA is for. Go ask them a question and they would be happy to answer that question, to walk you through anything like that. This is their world. They live in this every day. They're experts at it. And I know that they love to help and answer any kind of questions about this kind of stuff. All right, so I tried to make it as easy and plug and play as I could for you. But you are going, unfortunately, you are going to have to go change those percentages based on your goal in the MREA spreadsheet that I sent out with the Excel based on your GCI goal, because that will change. That being said, as we go into a shifting market, normally I tell agents if their lead generation goal is, go back to Jordan, what's the lead generation on that spreadsheet? It's like 9.6%. If I'm doing somebody's books and the lead generation percentage for $150,000, they're supposed to be doing 9.6%. And they're spending 2, I'm usually having consultation with that agent saying, hey, we need to up that 9. We need to, oh, it's 11.2 now. We need to up that. You're not spending enough in lead generation. We need to increase that. So, and because we need to be spending more money on lead generation. That being said, as we go into a shifting market, I'm having more conversations about it's not as important to, it's more important to reduce costs in this kind of a market than ever before. So I would not shoot to hit those expense category max amounts. Read the first 2 chapters in the shift book and see what you can do to cut those fixed costs back now. Because if you make the change now, you're going to go through the shift a lot better than if you decide to make the change 6 months down the road. And I promise, those who will make the changes now are going to ride through this and come out thriving on the other end. And I have an accountability meeting with our OP on a regular basis on how I am cutting expenses. I have a phone call today with our telephone company. We have phones in our building, and I sent out a survey to the agents in our market center. 9 people use the phone in their office. So at 1 o'clock today, I have a phone call with our phone company, and we are reducing the phones down in the market center to 9 to cut our budget from $2,000 a month to $200 a month. Be thinking of that kind of thing when it comes to your business and what you can do to reduce the costs in your business now in order to thrive through the shift, so that you can have that extra money to maybe take advantage of some bargains that may be coming up, or at least, and in your personal finances as well. Take a look at those numbers, and Amy will be talking about that more as well in her section. Any questions on that? Okay, here's the last thing, and then I'm going to turn it back over to Amy. If you do not have an accountability partner that you are going to review your P&L with every month, you won't do it. 90% of you will not do it if you don't have someone you're going to show that report to. I have to go into my OP the second Monday of every month and show him my P&L and where I spend every month, every dollar on. And if I go over budget, I have to explain why. And because of that, I make different decisions on how to spend our money. And I'm accountable for $125,000 every single month. Not only that, I'm accountable to 335 agents in this market center on how I'm spending their money. And I tell that to my staff all the time. We take 30% of every agent's check, and I honor that at an extremely high level. And we do our very, very best to honor that money. So I want you to do the same. As you bring that money into your bank account, honor that, put it to good use, but take care of it. Find somebody that you're going to have an accountability meeting with the second Monday of every month, and you're going to review those numbers. How did you do? Did you go over? Why? And what can you do to do better next month? Any questions on that? Commit to me to do that. If you don't do that, you won't be doing a P&L in 6 months, I promise. So that's the one thing I ask of you. Any questions on that before I turn it over to Amy?
Novely, why second Monday of every month?
Because that's when I do it.
Oh.
If you pick a date and it's always on that date and it's set in stone and you do not miss that date. Right?
So end of month is good and beginning of the month is good.
Yeah, just give yourself time for your bank statement has to be there. You have to have time to put it in the spreadsheet. So that's why ours is always the second Monday of every month. That's just why we have that date. So, and I think Amy's is that time too. I would love it if everybody did it on the same day, and then everybody could have conversations about it. Like, how are you saving money on this, especially in the shifting market right? Like we're in right now, how are people finding ways to cut back, do more with less? Any questions? I'm gonna turn it over to Amy then.
Okay, cool. Let me share my screen again. That work? You guys see my budget planning screen? Okay, so a budget is telling your money where to go instead of wondering where it went. A lot of us, and I say a lot of us as in me right here, I'm a lot of us, have had a habit or have been taught in the thinking of, if you can afford the minimum payment for something, you can afford it. So when I was first married, my husband and I both had this thought process of, we can have everything we want right now. We'll just get the minimum payments as low as we can. And it took a long time before we realized, oh my gosh, we make too much money to be this broke. What is going on? What is the disconnect here? So I want to share with you guys a little video. Let me switch this over. 1 second. Where is that? Okay, now let's see if this works. I don't think that worked. Can you guys see the video screen or still the other screen? Budget planning.
We can see the video.
Okay, awesome. Okay, watch this short little video with a cute little puppet of Gary Keller.
This is the story of strings. I want you to imagine that your life force is made up of strings. When you want to accomplish something, attain something, do something, you simply send out one of your strings, and then your life is automatically pulled towards that. So imagine that there are two motivated people who both realize this truth. One individual says, I'm going to focus on one thing at a time and see how that works for me. And immediately and predictably, his life begins to move towards it. Now, the other individual says, I also want to do a lot of things and accomplish a lot of things, and I just need to get after all of it right now. So he sends out 6 different strings at one time and immediately and predictably starts moving towards each of his desires. But he doesn't understand he is going to be denied. Why? Because his strings are pulling him in different directions, and he's going to reach a point where he simply can't get any closer. The competing tensions will simply slow him down. What about the other individual? Well, he ultimately gets pulled all the way to whatever he wants. He attains it, then he immediately picks another one and attains that, and then he picks another one and attains that. You see, the challenge we each have is recognizing this simple truth. We can achieve mastery sequentially, but not simultaneously. Tap into the transformative power of clarity.
Okay, let me switch back over here. Okay, you back to my budget planning screen, I think. Okay, so that is called the theory of sequential mastery, which I have showed my children that video so many times when they tell me all the different things that they want to do and all of the money they want to spend and all this different stuff, because I learned that in so many ways the hard way. So there came a point where Kelly, my husband, and I, we had to take a hard look at our finances, and we were like, okay, we're both working full time. We have all this stuff. We don't have an emergency savings. We've got 3 kids and a mortgage. What do we need to do? And if you said the word budget to me, I would turn off my ears, put the earmuffs on. I didn't want to hear about it. It just seemed like it was very restrictive. And it was just like, you can't spend, you can't spend. I didn't want to hear about that. And that is totally not what budgeting is about. Budgeting is just about telling your money where you want it to go so that it works for what you want it to do instead of wondering where it all went. So the first thing that we did when we sat down to really dive into our personal budget is we took out our bank statement and we wrote down everything we were spending money on. And on page 65 of your workbook, you have a personal budget worksheet. And this is just general categories, but you have your bank statements. So as you're looking at it, just put a mark by each thing that you spend money on. You don't have to
What
put
page number was
totals.
that, Amy?
It should be page 65 in your book, the personal budget planning worksheet. And just put a check mark by any of those that you do pay money for. And you might be surprised at how many check marks you end up having on your sheet. And while you're doing that, I'm going to tell you a little bit about how I was able to work our personal budget. So when we went through this, we wrote down all of our debts, all of our minimum payments on everything that we had. We had 2 car payments, we had an RV payment, we had cable, telephones, all of this stuff. We wrote it all down and really took a hard look at where all of that money was going. So the first thing we did is we made sure we had $1,000 in an emergency fund. And a lot of this is Dave Ramsey. So if you're Dave Ramsey fans, you'll recognize it. But $1,000 in your savings, emergency savings, just for emergencies. Once you have that, then you start your debt snowball. So first we analyzed our debt. I had a car payment, Kelly had a car payment. They could not be paid off within less than a year. So what did we do? We sold our ever-loving, lovely cars, and our budget for our car became what we made off of selling our car. So we had about a $7,000 budget on Kelly's car, and we had about a $7,000 budget on my car. Luckily, they had some equity in them. So we went from brand new cars to, we bought a 2015 Chevy Tahoe and a 2017 Volkswagen Passat. And those were our cars. They were paid in cash, no monthly payment. We looked at what else we were making payments on. We had an RV payment of like $300 a month. We love our RV. We didn't want to get rid of the RV, but we couldn't pay it off in a year. So we listed that sucker on RV Share and started renting it out the weekends we didn't use it. And that sucker paid itself off in a year off of RV Share. So being creative and finding ways to make liabilities become assets. We chopped down all of our cell phones to the most basic, most limited that you can get, which my kids hated. We got rid of satellite cable. We got rid of our home phone. Like, really look at these. Nothing is safe. Nothing is sacred in your expenses. Everything deserves to be looked at. And just simplify all of the debt that you can. Simplify your subscriptions. If that's something you cannot live without, call them and try and negotiate it down. You know, have you ever tried to cancel your cable? You have to call like 3 times and they transfer you to 12 different people who offer you a better deal every time you get transferred. So negotiate your subscriptions. If you have a monthly payment on something and it cannot be paid off in a year, look to downsize that. That was the most painful for me. And it took me a long time to buy into that. Like, okay, you can sell my super cute little car with the realtor plates and I'm going to go drive this older car and it's going to be okay. And I'm not going to cry about it. But once you start to see the savings stockpile from these things, so $700 for a truck payment, $400 for my SUV payment, that became $1,100 that we were able to put into our debt snowball. So you take your debt with your highest interest rate and you take all of the money that you're saving and you put it on that one debt. And as soon as that debt is paid off, you take that minimum payment and all that money you'd saved and you put it on the next one. And then that one gets paid off even quicker. And then you take that minimum payment and all the other that you saved and put it on the next one. We wanted our family to be involved in it. So we made a little, colored paper chain, and each chain had a debt written on it and was worth $10,000. And we hung these in our house and we told our kids, every time we pay off $10,000 of debt, we're going to rip off one of these chains. And when we started, we had $140,000 in consumer debt. And it took us about a year and a half, and we did not do vacations. We did camping. We used that RV to save us money on vacations. We camped a lot. We were just so mindful of everywhere our money went. In a year and a half, we paid off all of our consumer debt. A lot of that was by getting rid of what we had, not by truly paying it off. Another thing that we did is, I told you my husband got laid off. When he got laid off, I started stockpiling commissions in my business account because I was so scared that we would need them for like, I don't know, to pay a house payment or something. And it was really hard, but when you're beginning the debt payoff system, they say $1,000 is your emergency fund. Everything else that you have, if you have debt, should be paid on your debt. So I swallowed hard. It was so scary. And I emptied that, except for what I needed for my business savings. That's important too. But I emptied what I had been hoarding and we used that to pay off debt. So a year and a half after all of the consumer debt is paid off, all we have is our mortgage and utilities, that type of thing. So then we start increasing our emergency fund. So you want to have your emergency fund for your personal budget and your business budget to be at least 3 to 6 months. So if anything happens, you have a pillow there, something to catch you. And take and add up how much money comes in every month. And then budget so that at the end of the month, your budget is zero. It doesn't mean you spent every dollar. It means you told every dollar where to go. I told this much to go to savings. I told this much to go to charity. This much went to bills. And at the end, you should be zero every month. And you will have covered all of your expenses and your savings. So really, really not easy and really, really painful, but so incredibly life-changing. It has made the biggest difference in my family. Now we are, we only have our mortgage or whatever, and we've got loans on only what we have a plan to pay off in 1 year, or we won't get it. That means we don't have the money if we can't completely pay it off in a year. And now we're able to start investing. I just bought an investment property earlier this month, my first investment property, and are starting to grow for that big why, that big picture. Do any of you guys have like a budget story that you would like to share? You don't have to, but sometimes they're powerful to hear. Okay, so if you marked off on your personal budget worksheet everything that you are paying money for, the next thing that I would want you to do is look at your bank statement and plug in how much you're spending on these things. And then what I do on my personal finances and the Market Center finances every month is I go through with a red, yellow, and green highlighter. And red means I can get rid of it. I don't need that. Yellow, I'm going to look at that. I'm going to try and negotiate it down, maybe relook at it in a month. And green means it's like I have to keep it. I have to pay the rent on the building so agents have a place to go. But look at that every month and see where you can cut things and where you should add things. Being under budget is not always a good thing. If your budget for lead generation is very under, I wouldn't celebrate that. I would go find somewhere to invest some money in lead generation. So if we look at the business budget, you've got page 67. Let me switch over here. So you can take those chart of accounts that Nova Lee talked about in our P&L, and every category in the P&L, you can assign a budgeted amount. So you can put budgeted amount and your actual amount. You'll be able to tell if you're over budget or you're under budget every month. Do this for all personal and business expenses. You can also add sub accounts if you want to get really detailed to see, like for farming or internet, you can put, what web page you're paying for. Let's see, did anybody else lose audio? You can still hear. Okay, all right, I'll keep going then. When you're in a shift, the best way to budget for your business is to go back to basics. So when I was with the team, we had a lot of expenses that the team paid for. And so I was used to having Top Producer, Pro Agent website, all of these different third-party add-ons. And the team covered that cost. Transaction coordinator, all of those. When I went on my own, those became my expenses. And I looked at them and said, I'm paying $700 a month in operating expenses, and I don't have the income to offset that right now. So I implemented everything that Keller Williams offers in their technology suite and plugged into Command and canceled all my stuff. And it was scary because I had all my stuff set up. But you know what? I do not feel like my business suffered from that. And I went from $700 a month in those third-party fees to my $30 a month technology fee. So huge savings. So be willing to look at what you already have if you plug into it. And all of your staff and your tech trainers are there to help you plug in. We'll walk you through it. We'll help you. But you can save a lot of money by just looking into what you're already paying for. And then lead generation. Conversations don't cost anything, and they are still the best lead generation tool. So if you're bleeding money in lead generation and you're entering a shift, that is a place where maybe you go back to the basics and you start calling your SOI and you start talking to people and you get back on the phones. Make the most of your database. That's going to be your best ROI for the least amount of money. Any questions on that? Okay, on page 69 of your book, you have a blank budget template. It looks very similar to the P&L, but you can plug that in and figure out what your budget is going to be every month for those categories. And then you need to care for your budget. Let me just scooch over here. So lead with revenue. If you don't have the income to cover it, you don't have the money to spend it. So if you don't have money in the bank to spend it, don't spend it. Don't use a credit card. Find another way. Be creative. Red light, green light. You may have an expense that you're used to having. If the money slows, turn on the red light, back up your expenses, save some money, and stick to your budget. I think Novalee and I both, probably one of our most used phrases is, I'm sorry, that's not in the budget. Nope, we didn't budget for that. I'll try and budget for that later. We'll work it in, when we have it in the budget. And it's so important because it's so easy when you don't have to answer to, we have 316 agents and all the owners. If you don't have to answer to all those people, it's so easy to just be like, it's fine. I'm just gonna do this and it's gonna be fine. So act as if you have to defend everything. Have your accountability partner hold you accountable to your budget. And if you go over budget, you have to explain why. When I meet with Boyd and Emily every month, any variance on the budget, I have to say, this is over and this is why it's over. And I have to explain why that is over. When you have to defend where you're spending your money, you're going to think twice about it before you spend it. So that's another really good reason to have an accountability partner. Okay, so there's an activity on page 71. And it talks a little bit about how you would book these different budgeted expenses. So it talks about your monthly bill from your market center, $25 technology fee. What account would you book? Would you book that in? What budgeted account would that go against? And that one would be technology. $100 for car maintenance. Where would that be booked against your budget? Automobile. So pretty easy. MLS access. Does anyone know where that one would go?
Subscription dues.
Could be subscription dues or education. Printer copies. Supplies. Awesome. Newspaper ads. Marketing lead generation. Perfect. Okay, so you just returned from family reunion with the following credit card receipts. Where would these go against your budget? $375 for meals. Again, you're traveling for family reunion. It's a trick question. That can go under education. $450 for travel. You're traveling for family reunion. That can go under education. $600 for hotel. Anyone want to guess where you can book that?
Education.
Ding, perfect, gold star for you. $125 for that awesome new suit you saw when you were out shopping at family reunion. Where
education.
I wish it was education. Unfortunately, it's a personal expense. And $125 for marketing materials you bought at that awesome expo before the family reunion. Marketing supplies, what would that go under?
Marketing.
Lead generation, marketing. Awesome. So once you set your budget in those categories, you can see how much every month you have to spend. If you're looking at this regularly, I'm looking at it every single Friday. We do what's called a soft close here at the Market Center, where I go through my profit and loss statement. I make sure all my expenses are booked. I look at what I've spent. What do I have left to spend? Look at my planning. How much am I still supposed to make for the rest of the month? And I'm adjusting constantly so that I keep on course. So at the end of the month, I have as few variances as possible. If I don't look at it until the month is done, I can't make any corrections. So if you get used to just being aware, having top of mind of where my money's going, you're going to know when you need to make corrections, or that's not in the budget this month. Let me see if I can make some room for it in the budget next month. Any questions on that? Okay, I'm going to show you that awesome report, the agent trend report. Let me unshare here and open my internet really quick. Reshare. Okay, can you see my Google screen?
Yes.
Okay, thank you. All right, so if you go to mykw.kw.com, our intranet page, and log in, you will see your 10-year-old headshot if you're me. Click on reports, and it does take a minute. And then click on reports, associate, multi-year trends. And I'll think for a second or more. There we go. So this is my personal multi-year trends. So it's going to tell me how many units I closed, my closed volume by month and year, what my month over month change was, what my year over year change was, how many listings I took, what the volume was, how many I sold volume, buy sales closed, buy sales volume, leases, contracts written volume, your average sales price, your GCI, how much you've paid in company dollar, what your 1099 income looks like, what you've paid in royalties. So this is a great way as you're making those goals and you're like, what is my average commission? You can come here and find it. Or how many homes did I average selling last year or whatever. This is going to be your Bible. It gets updated every month about the 6th of the month. So this is accurate through April of 2022. And you can print that out on the 6th of every month and go in and see, how did I do compared to last month? How am I year to date over last year? How am I looking on my path for the goals that I set? And it'll help keep you on target.
Did you pull that from again?
Yes, I was gonna say, did everybody see where it came from? Okay, so you go to mykw.kw.com. And let me see if I can click over here. Click on reports under your picture. It's going to bring up this screen and you're just going to go associate multi-year trends. And there are other great reports you can click on too. Yeah.
My report has never worked. I've tried for the last 3 years. Any tips?
About you. Let's talk. Let's see what we can figure out. Because yeah, that is, I don't know why. We'll figure that out. And Jordan can help us. He's great at that stuff, right, Jordan?
Yes.
Don't tell me your reports don't work for 3 years. That's an easy solution.
Her reports don't work for 3 years.
I have reached out many times.
This is the first time hearing about it.
Okay, so Jordan is on it. Kenya Arnett, her reports don't work. So this is a really, really, really valuable tool. So when we meet with our ALC every month, we usually give them the Market Center's trend report and their trend report. We also ask that they do a P&L every single month. These are like easy expectations for top producers. So start making it a habit for yourself that this is just part of what you do. And you're going to always know your numbers, and you're always going to be able to share your story. I'm going to really quick switch back over to the PowerPoint. Okay. So this is what the trend looks like. Where did I go? Okay, so what is one action you will take as a result of what you've learned about budgeting?
Did you
Don't
want to
spend
say
money you
first?
don't have.
What's that?
Don't spend money you don't have.
Don't spend money you don't have. That's great.
Amy, for me, it's actually printing out my expenses and doing the marker thing, because I do try to do everything digitally, which means I'm not looking at it really.
Yeah, for sure. Let me find I have every single month I print out the bank statements, and every single bank statement I go through and I'm highlighting, marking, putting notes on the expenses, what account I'm booking it to. I do that every Friday. You won't have to do it every Friday, but as long as you're doing that like monthly, it becomes so much easier and faster to get through because you get used to what you're spending. Any other ahas on that?
I think for me, it's like really going through and like canceling subscriptions or like, you know, things that I don't really need or should be spending on, especially if it's not within my budget.
Absolutely. That's a great one. Anybody else? Okay, we're going to talk about how this feeds into our future, because we're all doing this for our future, right? We're trying to build this amazing big why, this future. So I want you guys to imagine that your health is like a wagon wheel. So in your book, this is on page 76. I want you to take each circle and give yourself a grade of where you're at right now between 1 to 10 in each of these categories. And I'll give you a second to do that. So if you look at this as a wagon wheel, and each spoke is only as long as the grade you gave it. How round is your wagon wheel? How bumpy is your ride? What does that make you think about when you look at this? What areas are you maybe not putting enough attention on to grow?
I think I need to put a spare on this tire.
Right? So consider physical health. Do you identify with any of the following statements? Being on the go all the time with no time to eat, relax, exercise, eating fast food instead of healthy food, spending long hours in the car, dealing with emotions of stressed clients, difficulty balancing life, family with work, having to look great at all times, safety concerns during meetings, open houses, showings, concerns about closings, paying bills. All of these things feed into our physical health. If we don't have our physical health, that's a big spoke that's missing. It's going to be a very bumpy ride, right? Do you guys have any ahas or thoughts about that? Where do you need to put more focus? What do you need to change?
I know that there needs to be change, and I'm trying to like think of this as the one thing, and maybe that's wrong, of like which one is gonna like be the catalyst for everything.
What's
What would
one
you
thing
recommend?
you can commit to doing today that will make all of these things easier?
Oh man.
For sure. Think about that. And in planning ahead, so we're going to move on.
Hey, Amy, I've got a question.
Absolutely.
It relates to the last one. You know, you did the story of strings,
Mm-hmm.
and you could get pulled in all these different directions real quick and then not do very well. And as I totaled up my numbers, I was going, that's pretty sad. So I am curious which one you would suggest get in place first so you don't get all wrapped up in strings.
For sure. And like I've always been told, like not to have more than one big goal going on at a time. And so like if I'm training for a half marathon, I shouldn't also decide I'm going to go on this crazy strict diet. I shouldn't say I'm going to do that and I'm going to prospect for 5 hours a day. I'm pulling myself in too many directions. Take one thing, see it through, give it your focus, and then do another one. So I like to use, all of us have on our doors, the One Thing 66-day challenge pages, where we pick a new challenge every 66 days that would come from one of these wheels. So whatever it might be, I'm going to try to work out 4 days a week or 5 days a week. It might be, I'm going to try and have one-on-one date nights with my kids once a week for the next 66 weeks or 66 days or whatever. I'm going to show up to work 10 minutes early for the next 66 days. Whatever it is, it puts your focus there and it gives you accountability. We hang them on the outside of our office doors so everyone knows what we're working on and how we're doing. Financial help. It can be like, I'm not going to DoorDash. I'm not. For 66 days, I'm not going to DoorDash. I don't think I would make it the 66 days. But whatever it is, you can do a lot of them, but I fully believe in doing it in sequence, doing one big one at a time. You can do smaller ones with a big one. I can read a business book and be walking on the treadmill. Like you can do more than one, but it's great to see where your biggest deficiencies are and then plan something in that area. And once you get that one done, go find something in another area that you're deficient in and pick that one and then complete that one. And your wheel will start to round out.
Hey, Amy.
Yeah.
I think sometimes it's really hard, especially for me, because I look at this and I go, and then it kind of motivates me because I go, oh my gosh, I need help in so many of these. So then I set the goals and I want to attack them all at once. So I'm sure there are a lot of people like me that, it's hard to pick just one. Because I feel that pull. I feel that need to
pick your one thing.
Better.
What is the one thing you're going to really focus on? And you can do smaller things in the other categories, but you can't do too many big things all at once or your attention is just spread. So if you've got a big goal you're working on, like 75 hard, a lot of the agents in our office are doing 75 hard together as a group. If you're doing 75 hard, then you may not want to have another huge goal going on during those 75 days. Let your focus be on that. That doesn't mean you can't read business books, attend a training, focus on lead generation. All of those things can happen in the background, but have one thing that your passion is set on, that you're going to go and tackle, and then pick another one after that. Any other comments on that? We did an activity with our staff once. It was very similar, but it was set up a little bit different. And in the middle of the circle, it was empty. And all of these circles were empty. And it said, okay, put what your most important thing is in the middle of the circle. And then put goals around that for each of these areas. And all of us did it and thought we did this great job and it was wonderful. And then the teacher said, okay, how many of you have you in the middle of your circle? And none of us did. We had my family, my kids, we had, building my business or whatever, but no one had put me in the middle and then put goals around them for each of these things. Sometimes we get caught in that mindset of what we're doing for everyone else. So remember to stop, check your health, put you in the middle, and then make goals for yourself. Okay, next part of planning for your future. So passive income, we want to grow as many streams of passive income as we have savings plans, have investments, engage in profit share. You can do, like, there's the title company, there's mortgage companies, there's all these different opportunities you have as an agent to invest within the industry and bring on passive income. And then you can build an MREA team. Not everybody wants to have a team. You can have a team and you can build it to a 7th level where you're able to retire and still get money from that team where it becomes a passive income source. Or you can build your book of business to the point where it has value and you can sell your book of business when you retire as a source of income. So if you look at things that way, you'll probably structure your business a little bit different. And so take action. What is one thing from this
Hey, Amy,
class?
quick question.
Yes, please.
When you're talking about the two different, like selling your business database or selling, or eventually like having the team that'll then pay you at the 7th level or something like that, is there a certain business model when you're applying for a business like an S Corp or an LLC that is pertain to each of those? Like, is that a bigger conversation?
No, Novalee, do you know? I wouldn't think it would matter. On here.
Yeah, I would think that there is a lot more tax implications on that when it would come to the ownership of who's involved on an S Corp versus an LLC. Like if it's a sole proprietor LLC, partnership LLC, like, yes.
The answer is yes.
The answer is yes.
Awesome.
Yeah.
Okay, so after talking about finances for 3 hours, 10, 11, 12, what is one thing you're going to do today after this class that is going to start your journey toward your sound business practices, financial sound business practices? What's one thing?
I'm gonna
Well, for
read the.
me- Oh, go ahead, Greg.
I was gonna read the first 2 chapters of the Shift book.
Great idea. Highly recommend. Jake?
I was gonna say, I've been trying to build a vision board, and so I'm gonna take this and make sure that it's within my vision board.
Love it. What else?
I'm going to write my like net profit goal and go through and go on command and see like even how many conversations I need to be having to hit my goals, which will help me also get out of my own debt.
Awesome. I love it. And I know I had an agent message me during the class that she wants to have a monthly finance meeting with me to go over her finances, which I love. So I extend that invitation to anyone. Get that accountability partner, set up your finance meeting.
Careful what you wish for, agents, if you just texted your MCA that. Careful what you wish for.
Love that. My favorite thing is meeting with agents anyway. So when they reach out to meet with me, I'm that much happier. So anybody else have anything to share? You can do it. And we are here to help.
I like the action plan on page 84.
Let me see which one is 84.
It's bottom line and take action as action steps of what you can do.
Oh yeah, absolutely.
Oh, that's awesome.
That's a great one to just kind of see where you're at and where to start. Gives you a to-do list. For sure.
Thank you so much.
Thank you guys for all coming. Hopefully you got some great information that you can use. And if you have questions, always feel free to reach out to your friendly neighborhood MCA or Novalee and myself.
Thank you.
Thank you.
You bet. Thanks, guys.
Thank you.